You ready? You got me running. You got me running. Got me running. Shake it, shake it, shake it, baby. Raise your hands up. Raise them up.
Okay, good morning, everybody. So this is the Forex Trading Asia Daily Currency Call, episode 313. It's the 16th of June, 11 a.m. here in Singapore, GMT +8. All right, so this currency call, you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency call is going to be very beneficial to both the long-term investors and short-term traders. We will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so later on Thursday, 2 a.m., there will be an FOMC news event, that could set the stage for how the US dollar and currencies trade over the next month. So I'm going to get Kim Hong here, currency analyst at LCMS Traders, to share a little bit about what to expect for the FOMC news event. Kim Hong.
All right, FOMC, the most look forward to event of the summer. No, I'm just kidding. Actually, there's much more things to do rather than, waiting for the announcement. Why is that the case? Because they are expected to hold interest rate unchanged, okay, at a targeted range of 0 to 0.25%, while keeping QE unchanged as well at the $120 billion purchase per month, okay? Now, that being said, what can we look into the statement or, the press conference and stuff like that? Let me share my screen. Okay. Now, what you are looking at here right now is the Federal Reserve page, okay? So what we want to do is pay attention, first of all, pay attention to the rate statement that's going to be released. So where do we find it? Okay, just scroll down, look under June. Okay, obviously it's not being released yet, okay? So I'm just going to use the previous statement, April statement, as an example, okay? So usually I'll go to the HTML version because of readability issue, it's easier to read, the ease of reading and stuff like that, okay? So the statement will look something like this. Now, what do you want to pay attention to over at the statement, okay? As you guys know that inflation has been rising quite a lot, okay, I would say, over the past 3 months, okay, for April, May, and March, yes. Okay, so the Fed actually dismissed this hike of inflation as, transitory. It's just transitory. So where is the word transitory? Over here, we can see that inflation has risen, largely reflecting transitory factors, okay? So the first thing that we want to take note of is whether the Fed will continue to downplay inflation hikes as transitory factors, okay, due to transitory factors. That's pretty much one of the most important things to look for in the rate statement, okay? Now, if they actually do a change in tone, instead of saying like inflation largely reflecting transitory factors, if they sort of like, I'm not sure how I'm going to phrase it, but if they actually tone down this whole transitory factors, this may actually be a change in attitude towards, QE. So they may actually be starting to talk about or even thinking to talk about cutting back of quantitative easing, okay? Now, that's pretty much for the rate statement, okay? The second thing to look forward to, let me go back, is the projection materials, okay? So the Federal Reserve releases projection materials on a quarterly basis, okay? So I'm just gonna use the March projection materials to give you guys a peek into what it may look like. So I'll prefer to go to the PDF version because it's more comprehensive, okay? It shows the dot plot, which I'll be going through later on, that the HTML version does not show, okay? So this is like, this is how it looks like, summary of economic projections, okay? So first thing to look for, okay? First thing to look forward to is, will they be revising their economic projections? Now, if you scroll down under table 1, oh, by the way, if you guys find that I'm talking a bit too fast right now, okay, don't worry. This session is recorded and will be uploaded to the LCMS Traders YouTube website shortly after the session. So, you guys can just always review after that, okay? Now, under this table 1, you want to look at, whether the Fed has revised its projection for GDP, unemployment rate, and inflation, okay? These 3 are the main things to look out for under the projections, all right? So this column here, now, usually the median values are the ones that's being more, I would say, more emphasis are being placed in terms of, when analyzing whether the Fed is giving a more positive outlook on the US economy or a more negative outlook, all right? So, for 2021, for example, for 2021, we are, the Fed is actually projecting GDP to be 6.5%, okay? Now, will they actually revise upwards or downwards? This is something that we need to pay attention to. Now, if they actually revise these values, if they actually revise the GDP and the inflation value upwards, this is actually a sign of hawkishness, all right? While if they actually revise downwards the unemployment rate, also, this means it's more hawkish. Now, if they actually revise the GDP and the inflation downwards and the inflation and the unemployment rate upwards, then that is more dovish, all right? Now, this will actually impact the US dollar, okay? Now, this is the first thing that we should look for in the projection material. Now, the second thing that we want to look for is something that's very popular in recent meetings. It's called the dot plot. Let me remove this. Oops. Okay, the dot plot. Now, what does this dot plot shows? It doesn't say anything here, right? Okay. So it says here, FOMC participants' assessments of appropriate monetary policy, midpoint of target range or target level for the federal funds rates. So basically, okay, long story short, it is just a projection of, where the Federal Reserve, the committee members, okay, the voting committee members think where interest rate will be in the near future, all right? So there are around 17 to 18 voting committee members, okay? So over here, if you look at under 2021, okay, which is this year, all 18 committee members of the Fed, okay, feels that, okay, projected that interest rate will be from 0 to 0.25%, okay? So it's below this line over here, which marks 0.25, okay? So this is pretty much expected, all right? Now, looking at 2022, we see that 14 members actually project interest rate to be from 0 to 0.25%, while 3 of the members, okay, actually project interest rate to be from 0.25 to 0.5%, while one of them actually projects it to be 0.5% to 0.75%, okay? Now, what we want to see, okay, or rather, if we were to see any of the committee members, okay, any of the dots, we don't know who these dots represents, okay? If we were to see these dots moving upwards, okay, implying that, more committee members, more voting members actually feels that you know what, we are going to see a hike in interest rate in 2022, this will definitely be a hawkish view coming from the FOMC, all right? Now, this may actually hint that, QE tapering is coming soon, or at least they are starting to talk about QE tapering, okay? Now, same for 2023 and 2024. At the moment, okay, the market consensus, or rather I would say that the FOMC, all of the members are actually expecting interest rate to be higher than its current level in 2024, all right? It's more like the 2022 and the 2023 that we want to pay attention to, okay? Now, So the US economic data releases recently has been pretty good, okay? Economic recovery continues, all right? Which is why some of the analysts out in the market, they are actually expecting more committee members to project an increase in interest rate by 2023, okay, early 2023. So we want to pay attention to 2022 and 2023, although personally I feel that 2022 may be a bit too soon, okay? So pay attention to 2023 to see if more dots are being shifted upwards and not downwards. Of course, if dots are being shifted downwards, then it implies dovishness from the Fed, okay? It means that we don't see interest rate to be up there, by 2023, which is not a good thing. Okay, so that is for the dot plot. All right. Now, take note that there will also be a press conference at 02:30 GMT plus 8. Okay. Now this is when Jerome Powell will come out and give a speech on the decision. Okay, and it will actually highly likely cause volatility in the US dollar. Okay, so if you guys are trading during this period of time, just take note, of this, this period of time whereby the US dollar will actually will be volatile. Okay, now during the last press conference, okay, Jerome Powell highlighted that recent rise in inflation will not meet the standard for a rates hike. Okay, this is something that we want to pay attention to during the press conference. Okay. Will he actually say something similar or the same thing again this time around? That's what we want to take note. Or will he actually admit that with the recent rise in inflation, the Fed members, the committee members are actually starting to think about QE cut, okay, QE easing. So that's the press conference, all right? So quite a lot of things to take note of, which I personally suggest not trading during this period of time because there's a lot of things to look to keep track of. All right, the rate statement, okay, whether the Fed is still downplaying inflation as transitory. The projection materials, whereby we have to look at whether the Fed make any revision to their economic projections. Okay, the dot plot, whereby the committee members will project interest rate to hike in which year. And lastly, the press conference, whereby Jerome Powell will be answering questions as well. The what do you call it? The journalists will actually definitely probe into this whole what do you think of inflation recently? Do you think the inflation actually warrants a talk in QE cuts right now and things like that? So high chance there's going to be a big move. And yep, just tune in back tomorrow and I'll keep you guys updated on what happens and things like that. I'll have more things to share with you guys tomorrow. All right. For now, back to you, Jinwei.
Yep, thanks for that, Kim Hong. Indeed, a special FOMC masterclass, as Jin has said. Yeah, thanks for the comprehensive explanation on the FOMC and how to prepare for it. Okay, so now let's move to the charts. We'll have Scott Andrews here from Forex Signals Australia to share about the dollar index. Scott.
All right, thank you, and thanks Kim Hong as well. For anyone that is watching that, I would say probably definitely watch that again when we share the link and take some notes, because that was, you really don't hear that a lot with an in-depth breakdown like that. So that's very important to understand what's sort of going on behind the scenes as well in regards to just overall what to look for and forward-looking projections. So US dollar, we are still holding around that support level at 90.50. I'll just quickly make sure that I'm not, let's say, no, disable, close that. I think that's okay. Now, all right, so in regards to what's happening with the US dollar as well, and so we've got the chart, and I did discuss that we had some data coming out last night, and everything looked, not too bad, and the dollar reacted to that. And I'll just quickly show that as well. So I just want to quickly just on Forex Trading Asia. I just want to briefly touch upon. So Tuesday night, we did have the core PPI came out, core retail sales as well. So that was slightly down on expectations. Something else I noticed, we had the NY Empire State Manufacturing Index. So that was down a little bit on expectations. The PPI month on month. Now that was slightly above expectation, 0.6 to 0.8. And then retail sales were a little bit down on negative 0.8 to negative 1.3. Although the revised figure, I think, was a little bit healthier. So US dollar really was held up, and we're still obviously waiting on, especially when Jerome Powell comes out and Kim Hong mentioned that, and exactly what to look for. But really, from previewing a lot of literature in the lead up to this particular currency call, I'd have to say that it's looking like everything is going to be pretty stable, but you never know. And like we've discussed before, when you've got actual news events being undertaken, please be very cautious. If you're already in positions, that's okay, but just be mindful that there could be some volatility. So if you've got narrow stops, please be cautious. So just stay tuned really for the FOMC meeting, and we'll see how it all plays out, guys.
Okay, thank you, Scott. And yeah, today is Wednesday. We will be doing the currency in focus. Today will be pound. So I'm going to get Jin here, Jin Dao Tai, founder of LCMS Traders, multi-million-dollar trader, trading an account with more than US $15 million on a daily basis. All right, Jin, pass it to you for the pound currency.
Thank you, Jinwei. What else can I say about the pound dollar? These guys have said everything about the US dollar already. What is one of the most prevalent things that you need to pay attention to right now is to sit out and wait. FOMC, you can see the impact of it right now, just showing you the chart straight away. The pound dollar on the H4 time frame pretty much has been sitting in that horizontal right across, very tight range. It's been that at the most 20 pip move across. We've seen that for the Aussie dollar pretty much across, Kiwi as well, Euro dollar been right across as well. So pretty much everyone is sitting out waiting for something to happen, which is the FOMC on Thursday morning. But what this means is that while you're sitting out, you're actually preparing for trades that could happen. Not just sit out and wait for something to happen, prepare for trades that could happen. Here we are looking at the Forex Trading Asia economic calendar. Today being Wednesday, we do have some pound news, some UK news being released at 2 o'clock, GMT +8. CPI numbers for the UK expected to go from 1.5% to 1.8% on a year-on-year basis. On a month-to-month basis, looking to go from 0.6 to a 0.3. So you can see here that on a month-to-month, we're looking at maybe a bit of a drop, but still that 0.3%. On a yearly basis, possibly on an inflation looking to hit the Bank of England's target or come quite close to hitting target of 2 to 3%. But I'll take all of this with a bit of a pinch of salt, because the year-on-year basis, we've seen the UK on a massive lockdown for long periods of time already, and this has actually been reflected, right? This data has actually been reflected from yesterday's, yesterday's employment numbers. We were expecting employment change to go from 84 to 150. It came out at 113, so a slight miss there. Unemployment rate was at 4.7, but claimant count, again, disappointed, was -55, came out at a -92. So at those kinds of numbers, I'm going to be a bit more cautious with the CPI numbers. It might not come out at 0.3. I think we might see a 0.2 or even maybe a 0.1 even. With that in mind, year-on-year CPI number might come out might stay at 1.5% at this point. So with the pound dollar in mind, if that does happen, if those numbers do come out as a 1.5 and a 1.1 or 0.1%, don't expect that big move in the pound dollar this afternoon. Why it also comes down back towards what's going to happen on Thursday morning at 2 a.m. Singapore time. We have the FOMC meeting minutes, FOMC statement, press conference, and rate decision. Kim Hong has went through all that in detail already. So what should you be looking for at this point for the pound dollar? I kind of like how it's sitting right now at this 1.4080 level. Why I like it at this point is for several reasons. I'll zoom in so it's a bit easier to, no wait, that looks terrible. Okay, at this point, why I think I like it at this point is because of this candle here where it rejected that move downwards, right? It tried to go quite significant. It went down about 40 pips downwards and straight away closed back up and set at this level. So it looks like it doesn't want to hit any lower. Based on this price action, it looks like it doesn't want to go any lower. And based on what happened over the past couple of weeks at, let me find my box, at this level here, at this level here, and at this level about here, and right across here, we've seen that reaction on the pound dollar towards these points, which is where it is right now. I think that we might actually see some upside from this point on. Although it is going to be right in the middle of that support and resistance level that we have set previously, I think that there might be some opportunities towards the upside at this point. But we know that if we're going to see it move up, if we're going to see it move higher, we're possibly going to have to see good news come from the UK and or bad news coming from the US. Bad news coming from the US might actually come in the form of the FOMC saying that they still continue to see the inflationary numbers as transitory, and they might actually urge more caution with the numbers or with the data being released. So with that in mind, if we do see that upside, you could be looking at buying at above, let's say above 1.409, no, let's be a bit safer. At about 1.4095, you could be looking at a 30 pip stop loss for a 50 to 60 pip take profit level towards the upside. You're looking at a 1:2 risk reward ratios on the upward towards that 1.4150 resistance level. Bear in mind, this is going to be something that is quite managed. You have to manage this quite closely because this is right in the middle of that support and resistance level. And also this will be highly driven by what happens in the FOMC, particularly in what happens in the FOMC. So again, at about 1.4095, I think you can even do a tighter stop loss at about 20 pips below the recent low, 20 pips, with an upward move of about 50 pips towards 1.4150. So if we anticipate this upward move in the pound dollar, this is another scenario where if we see a bad news come for the US dollar, bad news scenario from the FOMC on the US dollar. Same thing, just doing a quick recap. Aussie dollar, we expect that to hit that resistance and turn down. It's hit there. Looks like it's turning down, possibly going to go up and turn back down again. This is in a good news scenario on a FOMC. If it climbs up, anticipating that downward move could be a stronger US dollar. New Zealand dollar, we were expecting it to break 7167 to hit higher. At this point, it might still continue upwards. So if I change that line to move like that, then this will be in a bad news scenario on the FOMC again. So, with this approach, be it a good news or a bad news with the FOMC this coming up tomorrow morning, you have that trading opportunity on a lot of other currency pairs. You're not just stuck with one view. Here we have the euro dollar. rejecting, you can see here, rejecting that 1.2145 resistance. If it does turn down again, this would be a strong US dollar view or a good FOMC news perspective for it to turn back down. So a lot of trade opportunities to come around, not right now, but when the news is being released, you can set pending orders, or you can also trade after the fact. You know, early Thursday morning, you could be taking advantage of moves from the news, driven by the news. Lastly, the euro pound, as we were talking about, I'll zoom in one, okay. Yesterday, I was saying that it's going to test that 8580 level before bouncing back up. It's gone straight up and it's possibly going to sit across, turn back down. So now I think as a revision, I think it's going to come back down, test, and bounce back up. Why I think it's likely to bounce back up is because of the pound dollar. Well, why I think it's going to come back down this way is because the pound dollar we expect it to move back up, and then if it bounces back up, it might reject this level, hence euro pound bouncing back up again. So look for several trade ideas, several things to keep on your watch list to pay attention to. I don't think we're going to see a lot of price movements at this point, or all the way for pretty much for today, leading up to the evening and late Wednesday night and early Thursday morning before we'll see all that volatility come around.
Okay, thanks for that, Jin. Yeah, just a reminder, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Okay, so yeah, I know a lot of you are traders here. Some you may be doing well, some of you may be struggling. So whether which category you fall into, getting into a managed account setup can allow you to diversify your investment, where you can tap on professionals to do the trading for you. So right now I'm going to get Jonathan here, Jonathan from Forex Briefcase, to do a quick sharing on how the Forex Briefcase managed account can help you in terms of profiting from the Forex market. John.
Okay, thanks Chinwei for the introduction, and nice to see all of you again. I hope you guys have benefited greatly from today's session with Kim Hong giving you a very thorough breakdown on how to approach the FOMC. We have Scott also who shared with us a dollar index, how we see the dollar going to behave or react against a basket of other currencies. And Jin Dao also to give you a view, okay, on an alternate currency such as the pound, because for Forex we trade in pairs, so it is a good approach to see how you listen to one side of the story on the USD first, followed by another currency such as the pound today. Okay, and with some aspects of technical analysis, with the fundamentals, that is how you can approach the FX market in a very decisive and controlled way. And that is, and if you like that approach, that is actually how our trading team at Forex Briefcase navigate through the volatile markets as well. Okay, so I have the some slides to share with you today. Okay, just to bring you through what Forex Briefcase is all about. So without further ado, Forex Briefcase is a Forex managed account service, like Chinwei mentioned, whether you are a trader yourself or just looking for a passive income stream. The team at Forex Briefcase trades the FX markets to give you a return on your capital for you guys. Okay, we are currently having 800 and more clients, and these clients are spread across globally 12 countries. Just to give you some figures, okay, we have quite a very consistent and good return over the time since we have began. Over 33 months, okay, we have achieved an ROI of 93.97%. Okay, that brings the average to about a 3% ROI every month. Okay, and as with all investment products, I think a top cause of concern will be how risky is this. Okay, just for your assurance, this is a very low risk investment scheme. Our maximum drawdown over these 33 months has only been a maximum of negative 2.24%. Okay, and in terms of profitable months, we have achieved 90.9% months of profitability. Okay, that means out of 33 months, we have profited over 29 months. And bringing you down to this chart, okay, you can see that our growth has been in a nice gentle direction. Okay, consistent profits month on month with the breakdown below. Okay, and you can see we faced that 2.24% last year in the first quarter, and over 33 months we have only faced just a couple of losing months. So it is a very gentle, consistent growth that you can feel very comfortable with. Okay, this month we are, I mean this year alone, okay, we are already at 11.79%. Okay, up to April, which actually the April month closed in May. Okay, and coming, just 4 to 5 days. Okay, we are actually going for our 30th winning month. Okay, that will bring up again our percentage for profitable months. So if you are wondering and if you are navigating through all the info that you just heard today, and you are still in the midst of getting your forex trading to be consistent, okay, look out for us. Our team is here to even manage the trades for you. Okay, and by joining us on this journey, okay, trading FX on your own could be rather daunting, okay, because there's many emotional aspects involved, okay, but by coming on board, you get to see that forex trading can actually be a very consistent process, okay, and let us lead the way to show you and break through that mental challenge. Okay, so if you are still picking up the ropes, okay, the link is down in the chat. Okay, I look forward to seeing you on board. Okay, or if you are here just because you're interested in the FX market, getting updated with the news, but do not want to get your hands wet, let us do it for you. So look forward to seeing you on board. Okay, and join this profitable journey with us. Thank you very much.
Okay, thank you, Jonathan. Yeah, I've just pasted the links in the chat. So if you guys are interested in getting an account set up, click on the link and put in your contact details. The guys from Forex Briefcase will contact you. All right, so we have come to the end of the session today. We will see you guys tomorrow for the yen and gold analysis. Thank you so much and goodbye.